Hey, welcome to the Canaccord Growth Conference. I'm Kyle Mixon. I cover life science tools and diagnostics for Canaccord. Pleased to really have this fireside chat with Bionano Genomics here with us today. Bionano offers optical genome mapping technologies for genome analysis, which we'll learn more about today. So with us from the company, we have Erik Holmlin, CEO. Thanks, Erik, for joining us today. Appreciate it. So this is a growth conference. You're a growth-oriented company. Maybe not everyone knows the story super well, so we'll just go through like an overview of Bionano.
Yeah, sure. I appreciate it. I appreciate the invitation, Kyle. And your work is really well done, and everybody on my team loves reading your reports and what you're covering. So you're doing a great job. What I would say is that when you think about Bionano, we are a traditional life sciences instrumentation company in that we offer a platform for genome analysis, but we really don't want to be thought of as a traditional life sciences instrumentation company, because what we do is look at the applications that customers use when they adopt our platform. And across this landscape of human analysis in genomics, actually there's a long history of clinical testing that's been going on in pathology, cytogenetics. Molecular pathology is newer, but there's tons of anatomic and clinical pathology. And this is where our proprietary platform, optical genome mapping, is really making inroads. And what we're focused on is transforming those workflows. So if you look at cytogenetics, for example, karyotyping is the gold standard across the world in hematological malignancies. Every leukemia, lymphoma, myeloma, there is an attempt to karyotype. Now, half of the time, that result comes back normal karyotype, but the sample is being analyzed in the first place because the oncologist knows they have leukemia. And so this is a workflow we think we can digitize and completely transform. In addition to karyotyping, there's something called FISH, or fluorescence in situ hybridization. And optical genome mapping does what karyotyping and FISH do in leukemias and lymphomas. And then microarrays, which have been the first line standard in genetic disease analysis, optical genome mapping can replace that as well. And so OGM for short is consolidating these three legacy methods into one digital platform. And publications are now showing that it not only is faster, so karyotyping takes 4 weeks, mapping takes 4 days, but it's much more accurate. So better results. And so instead of getting 50% of your samples coming back normal karyotype, there are studies that are published that show that that number can be as high as 85% with mapping. So we have a very focused end user application. It's transforming this cytogenetic workflow within pathology.
Great. So you have a multi-billion-dollar opportunity. You want to just walk through the different segments as you see them?
Yeah, I think that there's a couple of key elements here. Number one is for optical genome mapping as a workflow. Certainly within these hematologic malignancies, leukemias, lymphomas, then across genetic diseases. So think of your developmental delays, intellectual disability, autism spectrum disorder, any of these sort of like situations where a child is missing a milestone, it's indicated to be looking at some form of a genetic analysis. And so mapping can be used there. We call that constitutional genetic disorders. But a third area, and a really important one, is in pharmaceutical R&D. So cell and gene therapies, CAR T, various gene therapies, stem cell therapies, all require some sort of genetic analysis in order to confirm that on-target effects have been put in place and that there are no off-target effects. And so what we see is a lot of adoption within pharmaceutical companies to use optical genome mapping as an alternative there as well. And so that's another significant opportunity for mapping outside of the clinical research pathology segment.
Got it. And then In terms of your your products, so you had the Sapphire for years. That was the main platform for OGM, and then I think early last year you announced the Stratus, which was like the next gen kind of platform, fourfold increase in I think throughput. So even talk about how that kind of ramp has gone, recognizing there's been some macro constraints and stuff.
Yes, the macro environment has been an interesting one to navigate, and so what our sort of historical progress has been led by the Sapphire system, which is really the first mapping platform for at-scale utilization. It's the one that we broke into these indications with. There's the majority of publications are based on data that were generated with the Sapphire system. And what we recognized was that higher volume labs, reference laboratories, would need higher throughput in order to really adopt optical genome mapping in a routine and industrial way. And so we developed the Stratus. It's based on the same core technology. It uses the same proprietary consumable, which linearizes DNA and enables detection of structural variations. The Stratus, as you mentioned, has about 4 times the throughput of the Sapphire. And we offer those together in the market today. And so we have seen, I think, excellent adoption. There's right around 20 Stratus systems in the field today, and they're all being used by high volume users. And typically the customers that are coming on board with Bionano and mapping tend to be those higher volume users. It's really found its place with people that are running routine clinical research applications. But we're still selling the Sapphire system. It's proving to be maybe an entry model for some labs. So the two of them go together. And what links all of this together is our software. And so we've developed something called the VIA software. VIA stands for Variant Intelligence Applications. And what's really great about VIA is that for the optical genome mapping workflow, it uses AI to completely automate the whole process from interpretation, annotation, analysis, and reporting. So the laboratory, which historically would be delivering multiple reports to an end user at multiple stages, different times, now gives one single consolidated report, which they customize and develop on their own, but they're able to build it around various guidelines, such as the NCCN guidelines. So it's an incredibly streamlined workflow. And VIA not only allows for the analysis of optical genome mapping data, but you can look at microarray data on it and next generation sequencing data. So you can analyze structural variations from NGS as well. And so in addition to our sales of optical genome mapping systems, we also sell the software. And so those are the two products that are really driving the growth of the company going forward.
Got it. So given maybe the placements and the shipments of the instruments maybe has slowed down or will be slow going forward, how has the utilization per instrument kind of trended, especially when you compare Stratus to Sapphire?
Yeah, I think certainly our highest volume users, we have more than one customer, so I guess that's multiple customers that are actually running close to $1 million a year in consumables, across the 150 or so routine users. Those are relatively rare. But what we're seeing is that a lot of customers coming in and running at higher volumes, and some of those are Stratus customers. Others are customers that have built a network of Sapphire systems to work together to generate the pull-through. But our focus, as times got tight for equity financing and the pressure was on to reduce operating expenses, we've taken over $100 million of non-GAAP OpEx, out of the P&L over the last several quarters. So we're burning substantially less cash. Those actions and others have enabled us through the end of the first quarter. We report the second quarter tomorrow, but through the end of the first quarter have enabled us to take gross margin from about 22% in the first quarter of 23. We reported 46% last quarter. We expect that trend to continue. That's related to cost reductions and volumes. But we have focused our company on really addressing mostly our existing routine users, training them on our software so that they have a higher internal capacity and can run more. And what we're seeing is, we're starting to look at sort of same customer consumables purchases, and it's growing. And so we'll have more to say about that actually in the earnings call. But we saw good growth, so far with this group, and we understand strategically how to work with customers and have them expand their menu. So the key to growth and utilization is somebody may adopt optical genome mapping to analyze, ALL, for example. And then once they have validated a workflow for ALL, then they can bring CLL, CML, and they can bring other indications on. Some run constitutional genetic disease analyses, like FSHD is a common genetic test that people will bring on. And so growing that menu expands consumables revenues on a per customer basis, and obviously customer profitability. We're not using our capital for customer acquisition, and so I think we're much more capital efficient, and we're seeing the growth. So it's good overall, and the margin is way up, so that's very positive.
Yep. So you're talking about a lot of clinical applications. Are you seeing that the clinical customers, let's say, kind of start at a lower utilization or like a pull through metric, and that grows, and that's becomes even more recurring, whereas the academic guys might be a lot early on, but might be more lumpy or stop kind of short at some point?
Yes, it's very lumpy on the academic basic research side, and that's driven by they get a grant, they run some samples. Sometimes those grants are enormous, and so they might run 500 samples, and that's great. But then the same postdoc that was running the samples buckles down and analyzes them, and so that continuity or routine use pattern isn't always there. And so, since we sell a RUO product, we tend not to say clinical customers, but we refer to them as routine users. And that's the same in pharma. It may not be a clinical end use, but it's still a routine user. And those applications are much more consistent, predictable, and higher volume overall. And that really is that is the dream overall, is to build that customer base. And so I think if you look at the history of Bionano, and you've been following us for a while, optical genome mapping we've known has incredible capabilities, and we've had to feel our way through to find exactly where it was going to make the biggest impact, and I think we've done that. And so that's why we're seeing this adoption. Now, at the front end of your question, you said you were talking kind of like, what does the ramp look like, utilization ramp for one of these routine users? And they tend to offer the technology in a validated environment. So we sell them an RUO product, they bring it in, they themselves develop an assay on it, let's say a laboratory developed test, for example. They will develop an LDT, and they'll start running samples, and then they expand that menu. So then they develop a second LDT and a third LDT. And we have some labs now that are running multiple LDTs on Sapphire or Stratus.
Got it. Yeah, so on that note, it has been for 5 years at least, you've been kind of working towards that goal of having OGM LDTs, OGM tests out there, commercialized almost. So I think you had some recent news about a Category 1 CPT code. Could you just talk about that as well as next steps for reimbursement for OGM?
Yes. So you go to a lab and you say, listen, this is going to be a great technology. You're going to want to use it to replace your karyotyping in fish. And of course, they're getting paid for those. And so they're interested in, well, will I get paid for OGM? And historically, that's been, well, maybe you can get some grant funding, maybe you can use your institutional funding. But last year in June, so in 2024 in June, the AMA established a Category 1 CPT code for using OGM in leukemias and lymphomas, hematologic malignancies. And then in June of this year, the AMA established a CPT code for using it in these constitutional genetic disorders. And so really our entire, routine use portfolio is covered by a Category 1 CPT code. And Category 1 is, an incredibly high bar. And so we've been able to pass that. And anecdotally, we hear from labs that they are getting paid at the CMS rate or whatever rate it is that they're contracted, which is always related to the CMS rate. We expect there to be coverage decisions coming out over time related to OGM. But one of the things that's, I think, a little bit easier with OGM compared to other, novel solutions in the space is that this is just a different mousetrap. Labs are already processing these samples to get this information. We're not asking a physician to do something they aren't always doing. Those labs are not asking an insurance company to pay for something that they're not always paying for. So the Category 1 CPT code is a tremendous leap forward for OGM.
So the thought is that your customers will get reimbursed or paid for tests that are developed on your platform. Therefore, you will get consumables revenue as that becomes a recurring kind of test for that customer.
That's right. So a barrier to adoption for them is economic. Will they be able to overcome the opportunity cost of not using something that they would otherwise get paid for? And our belief is that the CPT code is filling that gap. And that is really one of the final remaining gaps to increasingly widespread adoption.
Yeah, so exactly. What else remains from the clinical side of things?
Yeah, I mean, I think that we have certainly reached a certain tier where we've addressed a lot of the really existential questions, like without this I simply cannot move forward. I believe that all of those are set aside. And by the way, we have tremendous adoption across Europe. Europe is a little bit more evolved when it comes to healthcare reimbursement policy. So what we've seen there is that they've been getting paid for their OGM for a while. They need to continue to jump through hoops. So Europe is a very solid and established OGM business for this routine use. We're at this level where we've overcome these major barriers. And so now, methodologic tweaks that allow for menu expansion. And a lot of that gets done by current customers. For example, multiple myeloma is a notoriously difficult sample type to work with in cytogenetics because it typically does not grow in culture. And one of our users, the number of affected cells in a given sample is usually very low. And so it hasn't met our commercial criteria for QC of the sample. And one of our users in France actually published a paper demonstrating that they could reduce that input requirement by a factor of 2, and now they run multiple myeloma on a routine basis, and we're seeing this sort of adoption happen in other places. So there remain hurdles here and there. A major update that we recently released was to our software, which took the workflow for analysis, interpretation, reporting in constitutional genetic diseases and fully automated that. The first release of the VIA software only addressed that need in hematological malignancies, but we now have released that for constitutional genetic disorders. So, innovation that we can do that continuously streamlines and simplifies the workflow, expands the utility is the thing that we're focused on, and we're getting help from the existing customer base, which is nice.
Got it. So given cash is so precious, and you have tried to get OpEx down and get the burn down, and kind of set up a path to profitability, how are you gonna, invest going forward? Is it more on the like pushing boxes out there side of things, or kind of beefing up or improving the system and the software to enable like expanded applications?
Yeah, I think that if we look across the sort of OpEx line in the company, the area that is kind of 2x at least any other area is what we would call like customer success, customer support, and really focused on making sure customers understand the workflow, can perform it at a high level, and increase their utilization based on that training and support. So that's the area of greatest investment for us, which is sort of the opposite side of getting more boxes out there. And so we really have explicitly, we have said to the market that we're not, the stock market, but to the end user market, that we are not going to be out there driving new system placements like we had in the past, that we're going to focus on our existing users. And interestingly, when we said that on conference calls, we have large organized networks of users in 3 or 4 different geographic regions. They were alarmed because the lab up the street from them is excited to get OGM, a Sapphire, or a Stratus, their friend, their colleague, their mentor, and we assured them that we will continue to put systems out. And so we set guidance to do up to 20 systems this year. And I can tell you just through Q1, we haven't reported Q2 yet, but just based on what Q1 looked like, we'll exceed that number. So we have a healthy expansion of new systems, but instead of doing 80 to 100, we're doing 20 or so thereabouts. But these are all to routine users that will pull through a high volume of consumables.
Okay, great. So at the moment, your revenue guidance for the year is $26 to $30 million. It is like a year-over-year decrease, but given the changes, like it makes sense. You're gonna have an update tomorrow. You might like adjust that range or increase, decrease it. But when you think like qualitatively about the path forward in the U.S. academic side of things, given the NIH kind of news flow, the international side of things, whether it be EMEA or Asia, APAC, and then the kind of the clinical world as well. What are just some, the puts and takes that we should be thinking about going forward? What could like really, impact your performance without giving any numbers?
Yeah, sure. I think that overall we find ourselves in a reasonably safe zone. We do see it. We were at a conference last week, I think, in Houston, the Cancer Genomics Consortium conference taking place in Houston. We have a big presence at MD Anderson, so we spent a lot of time with them. And they indicated that even though their primary focus as MD Anderson is treating patients, they do see impacts of the uncertainty around funding, and it is affecting things for them. But oncologists at MD Anderson will not treat their leukemia patients, we understand, this is being told to us anecdotally, without an OGM report, right? So they're relying on it. Oncology patients are not going anywhere. So that seems to be a very consistent and stable place for us to be, somewhat insulated from NIH uncertainty. Europe is stable, and we're not seeing any of those kinds of pressures. There are different pressures there in Europe, certainly, but that's relatively stable. China was big for us for a while in the academic research market. That has slowed down, but there's tremendous potential there. We have a partner who has gotten a version of the Sapphire system registered with the National Medical Products Administration, or NMPA, there, and we're working through how they might commercialize OGM there. And so I think that there's upside potential there. In the Middle East, so we have a very significant presence in Turkey, and the Turkish health ministry in the last 45 days just placed optical genome mapping into its registry of clinical tests, so a physician can order it there, and so we see a lot of growth potential there, as well as across the Middle East. Our focus directly is on United States, Canada, Western Europe, and we also have a big business in Israel. So I would say that overall there's quite a bit of upside there, and we're in a stable place with growth potential here in the U.S.
All right, and then on your cash flow perspective, so you have cash runway until into 2026, I guess. So it's not extremely long. What are some of your options to extend that, I guess, as you think?
Yeah, I mean, I think that like any public company, we have a variety of vehicles that are available to us, including a shelf registration that we have, an S3 shelf, but we can finance on other platforms in the public equity markets. We have a debt, sort of on the books now, on the balance sheet now, and there could be some things that we might do with that debt to release additional cash. And so, yes, I think that we're at a level of cash reserves, which mean that management should focus on finding ways to replenish those. I think we'll need to raise equity capital, but I think with the new expense and cost structures, these improvements in gross margin, our capital needs, I mean, there are a fraction of what they have been in the last several years, which is great. I think we put that capital to good use. We figured out where our proprietary products could be adopted for routine use, both optical genome mapping systems and software, and now we can drive those forward to get to cash flow break even.
Got it. Okay. Well, finally, let's wrap up with a couple of questions in one. So first, what are some attributes, let's say, that people underappreciate or don't exactly expect from a Bionano, let's say, and then as you think about next year, how are you going to surprise people?
Yeah, I mean, I think that I'm the CEO of the company. I check the stock every once in a while. And I look at our market capitalization, and it's 1/3 of our revenues. So we're traded at a multiple of 0.3x. And to me, that reflects certain attitudes around our cash balance, but also a true underappreciation of what our potential is. One of the things that we'll hear in an investor meeting very common is, wait a minute, this isn't sequencing. And I'm thinking that's the epiphany. You got it. There's a lot of sequencers out there. By the way, they're kind of struggling. We're something that's in that space, but adds completely unique value with tremendous upside. So I think people are missing that. A year from now, I think that what we're going to see is a lot of progress on the reimbursement landscape here in the United States. So we'll see a lot more traction with third-party payers in a way that is really systematic. Right now, it's a little bit more anecdotal based on the CPT code. That seems to be working, and there's the potential that prices could change for these CPT codes in the positive direction. But I'm not making that prediction. But that would be cool to see. We are aware that customers have been asking CMS to take the pricing up. So let's see what happens there.
And the price right now is?
It's around $1,263.
Got it. Okay.
Yeah.
All right. Awesome. Well, good way to end. Thanks a lot, Eric.
Yeah.
Appreciate it.
Thank you, Kyle.